Hello and welcome to the Tuesday edition of Energy and Environment Weekly. I am Joycelyn Elakeche Ada. Nigerians woke up to new electricity rates as DISCOs begin immediate implementation of a 3-month tariff hike. The new tariff regime approved by the Nigerian Electricity Regulatory Commission (NERC) showed selective administration and deferment of applicable tariffs in different zones. An Abuja Electricity Distribution Company (AEDC), one of the 11 power distribution companies in Nigeria, also announced a scheduled tariff hike. We will bring an update through a live Skype interview with the spokesman, Mr. Oyebode Fadigbe, by Thursday edition of the program. And on all, NNPC remits 1.87 trillion naira to the Federation account in 1 year as it spends 5.34 billion naira on fuel importation in June alone. This and more after this short break. Stay with us. And Environment Weekly. Power distribution companies known as DISCOs have commenced the implementation of a 3-month tariff hike in the country. So far, 4 distribution companies, Abuja Disco, Ikeja Disco, Echo Disco, and Kaduna Disco, have rolled out their new tariff rates. The tariff hike approved by the Nigerian Electricity Regulatory Commission (NERC) takes effect from today. Meanwhile, NERC has stated that the new tariff order will terminate by the end of this year. There are indications that another round of hike is expected to be approved by January next year. NERC had okayed the tariff hike, but stated clearly that the DISCOs must consult with customers first and that the hike will not affect consumers who do not get 12-hour power supply daily for a month. However, the schedule rolled out by AEDC Abuja provides for 5 tariff band categories A to E. And categories E and D range from hours of supply between 4 and 8 hours daily limit respectively, which are frozen and not immediately affected by the hike. Categories A, B, C with hours of supply between 20 and 12 hours daily and above are affected. Echo Disco disclosed that there have been consultations and directions on tariff policy. It explained that NERC sanctioned the deferment of the applicable tariffs for customers in service B and D and E. These are customers with service commitment of less than an average of 12 hours supply per day over a period of 1 month. Therefore, the hike will not affect for the period of 1st of September 2020 to 1st January 2021. But they will continue to pay old tariffs for the period until investments that improve quality of service experience to them are made. The EcoDisco have grouped residential customers under R2SP and R2TP paying 21 naira 30 kobo and 21 naira 80 kobo per kilowatt, respectively, starting today. But for Ikeja Discos, customers are grouped between A and E, with the C to E customers having 12 hours supply down to 4 hours daily. The new tariff are not applicable to consumers with below 12-hour power daily supply. The top being Kaduna Disco also hiked its electricity tariff, while there is no increase for band D and E customers in the Kaduna zone. The shadows show that the tariff for band A rose significantly from about 40 naira to 56 naira 31 kobo per kilowatt. The new Kaduna tariff will also end by December this year, while a review is expected by January next year. It will be recalled that the chairman of NEC, Professor James Marmor, last Wednesday hinted that the new model being implemented is the service-based tariff. Under this service-based principles, Discos will only be able to review tariff rates for customers when they consult with customers and commit to increasing the number of hours supply per day and also the quality of service. He, however, stated that there would be no immediate hike. Three Discos, Ikeja, Eko, and Kaduna, which made the announcement for immediate hike, were said to have submitted their amended performance improvement plans, PIP, to NEC for approval. That formed the basis to raise their rates and were granted approval. It is expected that all the Discos may follow same pattern immediately. A planned hike of about 47% average for July 2020 was halted by the National Assembly. Then the power distribution companies known as Discos stated clearly that the suspended service reflective tariff, known as SRT, was not realistic, as the companies lose about 14 billion naira monthly due to the capped estimated bills collection. The managing director of the Abuja Electricity Distribution Company, AEDC, Engineer Ernest Mupwara, told a public hearing by the House of Representatives Committee on Power that there were outstanding requirements before the tariff should be implemented, but the Nigerian Electricity Regulatory Commission, NEC, never cleared that. He listed one of the requirements as the removal of estimated billing caps. The AEDC is one of the Discos which announced immediate hike today. You will join us on Thursday, on our Thursday edition of the program, where we would have the head corporate communications officer, Mr. Oyebode Fadipe, will be here on E&E to discuss the dynamics of the new hike. We'll take a break now, and when we return, we will be discussing all matters. Stay with us. Welcome back to Energy and Environment Weekly Tuesday's edition. If you're just joining us, you're right on time for the oil sector of the program. Oil prices rose early trade today, reversing overnight losses as investors shifted to risk asset and out of the safe haven US dollar, which slid to a more than 2-year low. Brent crude futures climbed 27 cents or 0.6% to $45.55 a barrel, while U.S. West Texas Intermediate crude futures rose by 21 cents or 0.5% to $42.82 a barrel. Both benchmark contracts fell around 1% on Monday on worries about oil oversupply, with global demand stuck below pre-COVID levels. The dollar was last down 0.04% at $92.146 against a basket of currencies after hitting its lowest since May of 2018. It continued to fall in the wake of the U.S. Federal Reserve's policy shift on inflation announced last week. The weakening U.S. dollar makes oil and other commodities priced in dollars more attractive to global buyers. Analysts said the market is focused on the stalled recovery in fuel demand as countries continue to battle the coronavirus pandemic with rolling COVID-19 lockdowns. Meanwhile, the crude oil price update indicates that the price needs to hold at $42.62 to sustain upside momentum. There's a new minor range at $41.46 to $43.78. The price action the last 3 days suggests the short-term direction is being controlled by its pivot at $42.62. A sustained move over $42.62 on Monday will indicate the presence of buyers. If this move is able to generate enough upside momentum, then look for the rally to possibly extend into the minor top at $43.78. Last week's high at $43.78 is a potential trigger point for an acceleration to the upside. The daily chart indicates there is plenty of room to the upside with $46.43, the next target. The only thing missing is a catalyst to launch the move. A sustained move on the $42.62 will signal the presence of sellers, and this could lead to a labored break with potential downside targets, a series of levels at $42.01, $41.46, and $41.39, and also $41.33. For a look at today's price outlook, let's check out our price table for today. Welcome back. In another development, oil have edged higher in New York on signs U.S. crude stockpiles extended declines. A survey by Bloomberg indicated that crude inventories probably dropped by 2 million barrels last week for a sixth weekly draw, which would be the longest run of declines this year. Oil capped a fourth monthly gain in August, but has struggled to make a convincing push above $43 a barrel as rising coronavirus infections raised concerns about sustained demand. However, the biggest producer in the United Arab Emirates signaled it may slash output in October to meet the country's target under a global production cuts deal, helping to ease a global glut. U.S. gasoline stockpiles fell by $3.50 by 3.55 million barrels last week. According to the survey, that would be a fourth weekly draw if confirmed by Energy Information Administration data on Wednesday. Industry figures are due today, so we are expecting that later on today. And moving on, NNPC remittance to the Federation account hits 1.87 trillion naira in 1 year, as the corporation says it has spent over 5.34 billion naira on fuel importation in June alone. We'll bring you this and more after this short break. Do stay with us. You're all watching Energy and Environment Weekly. Thanks for staying with us. Moving on the program, the Nigerian National Petroleum Corporation, NNPC, remitted a total of 1.87 trillion naira to the Federation Account Allocation Committee, known as FAC, between June 2019 and June 2020. The latest report from the NNPC, which comprised the full financial report for June, also showed NNPC's operating revenue increased by 32% compared to May. However, the gains were shown to have been wiped out by the corporation's cumulative expenditure, which equally went up by 32.8%. Payments are made to the Federation account by NNPC after the adjustment of crude and product losses, as well as pipeline repairs and management costs incurred during the period. The corporation reported various levels of losses on all of its strategic business except 4, with operating deficit on the non-functional refineries standing at over 10 billion naira. In June of 2020, NNPC therefore remitted the sum of 68.42 billion naira to the Federation Account Allocation Committee from June 2019 to June 2020. Total NNPC remittances to FAC is 1.870.13 trillion naira. Out of this, Federation and joint venture with government priority project received the sum of 845.42 billion naira and 100.024 trillion naira respectively. The group operating revenue increased by 32.05% or 76.39 billion naira between May and June to stand at 314.72 billion naira. With the same trend, NNPC expenditure also increased by 32.80% or 77.30 billion naira at 312.95 billion naira. June expenditure remained at 0.99, marginally below par as a proportion of revenue, same as recorded in the previous month. NNPC further said it experienced a lower trading surplus of 2.12 billion naira compared to the 2.68 billion surplus in May of 2020, when the world began a fragile recovery from the impact of the COVID-19 pandemic. However, it noted that there was a 21% net increase in performance, which it attributed primarily to the 166% rise in surplus posted by the Nigerian Petroleum Development Company, known the NPDC, one of its subsidiaries of the corporation. According to the corporation, takings from the Nigerian Gas Company, NGC, Nigerian Gas Marketing Company, NGMC, and Duke Oil Incorporated Group grew by 16%, 1%, and 127% respectively. The corporation said it is expected the global economy to grow by 4.1% in 2021 based on the assumption that COVID-19 will largely be contained on the global level by the fourth quarter of 2020. And NPC also said it's expected that no further significant issues will derail economic development. It stressed that national gas production in June decreased by 0.26% at 231.28 billion cubic feet compared to output in May of 2020, translating to an average daily production of 7.709.38 million cubic feet. And a report on subsidy. The NNPC spent about 5.34 billion naira on fuel subsidy in June, months after it changed its pricing method in an effort to eliminate subsidies. The NNPC spokesman, Mr. Kenny Obateru, said the cost represented temporary payments to marketers. He explained that the marketers imported fuel and then sell it on for stocks they held when the subsidy was removed and would be spread over 6 months. Mr. Obateru remarked that since the subsidy removal started with reduction in pump price, marketers have to be paid the differential of the government-verified stock they had. In March, amid a global oil price crash, Nigeria cut its fuel pump price and said it had eliminated subsidies through a new price cap that maintained government control but allowed prices to move with the market. But international observers see Nigeria's prices being kept artificially low at 145 naira per litre. A study supported by the British government estimated Nigeria spent 10 trillion naira on subsidies from 2006 to 2018. The figure is more than the individual budgets for health, education, or defense. And next week, we will bring you more update on the subsidy story and shed more light on that report. Meanwhile, PPPRA, the body tasked with setting pump prices, has not published retail prices since March the 31st. Fuel importers have claimed that there is a set monthly depot price, but it is not widely distributed. There have been conflicting reports on the pricing by marketers. The conflict around the new pricing mechanism has been a point of contention for those monitoring to ascertain if the subsidy cost has been permanently eliminated. Meanwhile, the management of the Department of Petroleum Resources, DPR, has been commended for its ingenuity in ensuring that the impact of the COVID-19 pandemic does not cripple the nation's economy due to the crash in oil prices. The Minister of Information and Culture, Alhaji Lai Mohammed, hailed the department when he paid a courtesy visit to the headquarters in Lagos yesterday. DPR, if you must know, is the Oil and Gas Industry Regulatory Agency. The minister observed that the DPR took measures to ensure that the real impact of COVID-19 on the economy of Nigeria was not felt too much and expressed thanks on behalf of Nigerians. He was conducted around the operational units of the agency by the Director and Chief Executive Officer of the DPR, Mr. Saki Awalu.
And it happens on every vessel that comes into Nigeria for discharge and every vessel that comes to Nigeria for export. And this is including LNG, all the gas we export, all the crude we export, all the product we import is accounted here. We see it live 24/7. So nothing escapes. Then for this, we have that gas elimination for flare, the gas commercialization is there.
Alhaji Muhammad was accompanied on the visit by journalists, said despite the crash of oil prices due to the impact of the pandemic and the cutting production by the Organization of Petroleum Exporting Countries, OPEC, the astuteness of the management of DPR kept Nigeria's economy afloat. He said beyond regulating and managing the nation's oil and gas industry, the DPR is also engaging with all producing communities to ensure that there is sustained peace for investment to grow into fruition in the Niger Delta region. He also commended the DPR for the accountability it exhibits in the management of the flow of revenue to the nation, which goes straight into the Treasury single account, as well as utilizing technology to account for every molecule of oil and gas extracted in the country. The Director and Chief Executive of DPR, Mr. Awale, said Nigeria would be a net export of refined petroleum products by 2022 through the combined capacity of 375,000 barrels per day from 27 modular refineries, 650,000 barrels from the Dangote refinery, and 450,000 barrels from the government refineries. He said the agency has keyed into the diversification agenda of the administration by providing the enabling environment and pushing for the local production of fertilizer to boost agriculture in the country. Mr. Awalu said the government is also implementing a 6 billion standard cubic feet gas supply per day to lay the foundation for the industrial and economic growth of the country. And on environment, similarly, the Minister of State in the Federal Ministry of Environment, Mrs. Sharon Ikazo, has commended the National Biosafety Management Agency, NBMA, for its effort in ensuring that the activities of modern biotechnology and its products are properly regulated. The minister visited NBMA yesterday and noted that since inception of the agency, it has achieved a lot by putting in place appropriate measures to protect human health and the environment from the potential harmful impact of modern biotechnology products. The minister said the NBMA is very significant in the efforts of the federal government to ensure sustainable development in the country. She promised to assist the NBMA in meeting its areas of challenges so that staff of the agency can discharge their duties more efficiently. The Director General/CEO, Dr. Rufus Egbegbe, appreciated the presence of the minister and restated the commitment to ensure the realization of the mission and vision of the agency. The DG led the minister on a tour of the agency's genetic modification, detection, and analysis laboratory, where the minister commended the modern state-of-the-art equipment. Dr. Bega gave a presentation on the status and mandate of NBMA, which include regulatory instruments, concerns international partnership, giant strides, regulatory processes, approvals granted, challenges, biosecurity, amongst others. And that's the size of our package for today's edition. Join us on Thursday where we'll bring you more top stories from the energy and environment sector. Thanks for watching. I am Joycelyn Elakeche Ada. Stay safe.